Talk a little bit more about where the best opportunities in fixed income are right now. Let's bring in Dina DiLorenzo. She's president of Guggenheim Investments and managing partner of Guggenheim Partners. Guggenheim, of course, has over $335 billion in assets, primarily in fixed income. Dina, welcome. Surat Sethi is still with us. So credit has been so strong pretty much across the board. Maybe you can talk a little bit about where people still find the most attractive segments of the market. I mean, spreads have really come in a lot. So kind of where might the best opportunities for performance be?
Where we focus mostly is where we find relative value outside benchmarks.
Sure.
But as it relates to the private credit markets, we see, 4 areas that we focus on. 1, private debt. 2, infrastructure, real estate, as well as structured credit.
Yeah. Well, in private credit is one part, even you can kind of broaden this out to the whole fixed income landscape. We know we've seen yield, high yield, those spreads are so low, right? Investment grade, some of the lowest on record,
Sure.
that whole complex. So it seems like there's just this insatiable demand, and maybe it's because yields are still relatively high.
Well, we find real opportunity in the smaller sectors like securitized credit and the private markets where there's relatively elevated spreads, and really in the, going back to the structured credit, there's real opportunity there, and it's an asset class that we believe people, it's been around for decades, but it somewhat still mystifies investors because it's somewhat complex, but we find it has a lot of attractive qualities where you can find opportunity.
Count me among the mystified. So how do if I'm tempted to get into these markets, what's the best way for an individual investor of some affluence and some sophistication, but not an institution, to get in? What's the best way? So
the best way is, 1, to obviously hire a manager like Guggenheim, who has a very deep-rooted team.
Do you like that ball anywhere else? You like it right about there?
That was
smash it?
very big
I mean, thanks for laying that up. I appreciate it, especially on a Friday. No, seriously, though, it does take some institutional know-how, and we've been practicing that for 20 years. And I do think that it requires, it is a complex asset class, but it does deliver 3 primary qualities that we always tell our clients are important to consider. 1, it allows, it gives investors protection for diversification. So it obviously gives them access to a differentiated set of assets. It also gives them a higher risk-adjusted rate of return relative to similar credits in other alternative, fixed income alternatives. 3, it's uncorrelated to traditional fixed income asset classes. So we have found that including those in the allocation finds those opportunities.
So when you look at your demand, where is it mainly coming from? Is it institutional and now retail? Has that grown kind of over the last few years?
So that's a great question. And we definitely see an increase in retail demand for a variety of different products. It's generally in 2 places. 1, it's definitely the private credit markets and products that will allow them to have a certain amount of liquidity so that they can meet their objectives, right? It's really important for retail investors to understand the private credit products. 1, because they're not as liquid as some of the public market products, and therefore, over time, they want to be able to rebalance their portfolios since those types of products don't price as regularly as public markets. The second area we get, and so therefore we offer products in BDCs, interval funds, to get access to the private credit markets. The other area that we see retail clients looking for flexibility and customization is in retail SMAs, right? Our traditional fixed income products now, the advisors want to have those not just in the packaged products like mutual funds or ETFs, but they really want that customization for the retail clients, particularly in core plus, limited duration, and municipals.
How much do you need to pay to play in this game?
The
typical customer who comes in, how much are they putting to work here?
So for the right allocation to a retail SMA for each strategy, it's probably $250,000, right?
Well, that's lower than I would have maybe guessed, actually.
Yes.
More accessible.
That's right. And we have a way that we actually achieve diversification within those retail SMAs through completion funds, which is sort of a marketable, it's a non-marketable mutual fund within the retail SMA that achieves the right diversification. In the interval funds, though, you can actually go at lower, ticket sizes, probably around $50,000. And in the private BDCs, it's probably around the same amount.
So, as we move into a new administration and regulation now is being removed, how does this help you guys in terms of getting to the end customer, and where does that work?
Well, first of all, I think with the new administration, we've identified that there's probably going to be an increase, policies focused on increased infrastructure investing in hard assets, right? So we are advising our clients to really pay attention to investments in infrastructure and real estate. We also think that identifying investments where you really can find the return outside of the traditional indices is also really important. And so going forward, appropriate credit selection is going to be more important than it was in the recent past, because the new policy changes are most likely going to create some volatility. And therefore, we want to be able to manage that risk and maximize the return. So having that diversification within a fixed income portfolio through really actively managed strategies is going to be key going forward.
Dina, thanks for being with us.
It was
Dina
a pleasure.
DiLorenzo,
Thank
Guggenheim.
you.
Thank you so much.
We'll peek
Appreciate
into
it.
the biz.
Just one last thing. Tomorrow is a very important game.
Yep, it is.
Yes.
It's Lehigh Lafayette.
Oh, Lehigh
Go
Lafayette.
Lehigh.
Yes.
And I thought you were talking about Indiana. Go Indiana.
That too
Ohio
as well.
State.
Kelly, you have an important game too?
No, I don't.
Okay.
Nope.
All right.
Nope.
Well,
Just
go Lehigh.
Yeah, we'll go Lehigh and Indiana.
And